Hello ICT traders, welcome back to the channel. In this video, I want to show you something very powerful. Now, most people know how to take a trade and they know where to enter a particular trade. But then exiting that trade becomes a very difficult thing to do. All right. So what I will be doing in this video is to actually show you one of the perfect way to exit a live trade. All right. By the way, this particular trade was a trade I took yesterday, and this was a trade I took today. This one reached my TP anyway, but this one started coming down from here. Now, one of the very interesting thing about this is the fact that you can actually know whether to leave your trade, to keep going on when you see some kind of a retracement coming in, or to actually break even, or to remove your profit. All right, so let me show you how I normally do that. So for the first example here, that was a trade I shared on my Telegram community. Let me even show you just to be sure that this was the trade. Before taking the trade, I actually told them buying from here with good risk management. So that was a particular trade I took, this first one. Now, when I took this trade, I was in this particular trade from here on the 15-minute time frame anyway. I saw this massive price action that came in on Friday during NFP. Right here, price move, boom, to that area, retracement came in. We never had a shifting structure to the downside because the lowest point price went to was here, and then it came here, it came here, it came here. We never had a shift in market structure, which is a very interesting thing to see. So we now saw price having what here? We saw price gave this boom from here. You saw price now breaking structure to the upside, targeting this area. When price came back to this area, it was later during the Asian time. And I don't take trades, and I don't normally take trades during Asian time. I wait for London or New York to take my trades. So I decided not to take the trade because if you look carefully, let me show you. This is where the Asian range was. All right, the Asian range was right here. So I decided not to take the trade. I waited for London sessions to start, and then I saw this price action. Boom, price went lower here, sweeping this liquidity. All right, right here, sweeping that liquidity, trading into this rejection block here. Boom. When I saw that, I saw price having to push above here, right, above that area. I said, okay, come down to this area because this is a typical breaker block formation. If you know what a breaker block is, this is a typical breaker block formation. It is a nice entry pattern that anyone that sees it would be able to take advantage of it. So I said, okay, give me that opportunity to take the buy, and price came right into this area. Let me show you. This is a bullish breaker. This one is the bullish breaker block. So price came right into that area, and I decided to enter the trade here. All right. But then price started going here, and I saw this quick rejection. I knew that somewhere around here we're going to have difficulty in price going up because we have liquidity resting here. It is possible for price to even reach here, and it is possible for price to go here, the buy side liquidity or the drawn liquidity on those sides. But then we have to be careful. Watch out for the momentum. All right, we are watching the momentum of this price action. So when I saw this coming in, I said, okay, there is something wrong here because all the price action was, you can see how smooth they were. I saw this, I said, okay, something is gonna happen here, so I have to be careful. Anyway, I had to even move my stop to break even. And then, just like the way I took the trade, always know that your exit will be similar to your entry. You enter after a shifting market structure. Likewise, when you are exiting, you must see a shifting market structure to know that the trend has ended. So I was bullish. All right, I was going up. If I see a shift in market structure, it simply means that this movement is not going to go further up again. So my exit will always be where there is a market structure shift on the trend. So that was exactly what I saw. So I said, okay, let me just monitor this on the lower time frame, on the 3-minute or the 5-minute or even the 1-minute. But I did it on the 1-minute anyway. I was looking at the price action. I said, okay, this was the massive retracement that came in. Give me a reason to close my trade. I said, okay, if you close below here, it simply means that that was a shift in market structure, and I would be doing more harm to myself if I decide to stay in the market. And notice what happened after that. Let me show you. Boom, price shifted structure. That was where I said, okay, I am done, guys. I am done, because this looks like a bearish mitigation block which price will use for the downward movement. All right, this looks like a bearish mitigation block. Notice, you see, price started going down from that area. So when I saw that, I said, okay, I am done. I am going out of that particular trade. And that was the end of the trade for me after this market structure shift. So now notice what happened after that. Price had to come back right into this. You see, my entry was here. That means I would have given back the money to the market. All right, I would have given back the money to the market. So your exit will be the same way you entered the trade. Please don't forget this statement. Your exit will be in similar pattern with your entry. So what happened today was also the same thing. All right, but then this one delivered to the upside without giving that shift in market structure. So if you are exiting, especially those of you who are waiting for price to go to a point of interest, your exit should be when you finally see a shift in market structure. For instance, let's say we are taking trade from here and our target was here. If we see a shift in structure here, it simply means we should exit it. We should exit it. All right. If we see a shift in market structure here, it simply means we should exit it. So what happened today was similar thing. I saw price had this. Price was coming down, downward. And then boom, there is a shift in market structure here to the upside. All right. I use a shifted market structure for an entry. What will I use for an exit? So a market structure shift leaving me with a bullish breaker here. And that was when I was in the trade here. Boom, price went up. Now let's go to the lower time frame and you would see whether you have seen a shift in market structure while it is going up. Have you seen any shift in market structure as price was going to the upside to that area? Definitely no. Definitely no. And somebody is looking at this. This is not the shifting structure. This was the return to the point of interest before entry. So notice how price went up. No shifting structure until after price finally reached my target and now shifted structure, and see how price has been printing downward after that one. So this is one of the things you must always look for. The same way you enter the trade, look for that same pattern. Price may be coming like this. You see, shifting structure, entry, price going up. All right, going up to your target, but then suddenly you saw a shifting structure. It simply means price may not go to that point you are looking at. I think I will take time to explain this better in another video, because I know some of you are still struggling to understand this. All right, I made this video in a bit in a hasty way, but then I'll try and recap it and give it a more definition for you guys to understand. So that's basically how to use this pattern for an exit. All right, thank you guys for watching, and I hope to make more videos to help you guys. See you in another video.